Welcome traders to this educational video of Nifty short-term view. You are looking at the Nifty futures daily time frame chart on the right hand side, and on the left hand side I have the Nifty futures hourly time frame chart. In terms of trend, obviously we can see that the price is trading above the both of the moving averages, and it is the same picture even in the hourly chart, so it is pretty clear that the trend is up. But one thing has been very special over here, which has been the failing of the negative divergence. Now, what happened over here was before a few days, I guess there was a negative divergence, and you are seeing that since 1st of August, Nifty futures was going up overall, but in a very slow fashion, and the momentum was very slow. If you see the price going up just in a matter of 3 to 4 days, we saw a rally of 16,400 or 430 to possibly 17,371. And in last few days from 17,371, we have still rallied till 17,558. So this clearly shows diminishing momentum. Even the candles have been pretty small in terms of its size. And there was also a negative divergence. I would just zoom a little. And when we convert this particular candlestick chart into a line chart, we can see a higher high in terms of price and a lower high in terms of RSI. So this was a clear-cut negative divergence. But what happened over here, something very interesting on this day, that the negative divergence was negated. Now, in my experience, I've been trading now since almost 16 years. I've seen one thing, that whenever this negative divergence is negated, generally market shoots in the opposite direction pretty well. And what happened today was something which I would like to share with you. In the extreme shorter term time frame of 5-minute chart, if you see properly, we saw an intraday breakdown, and this intraday breakdown did actually occur at the two previous highs of the 5-minute chart. Now from here, there was an immediate pullback, and this happened within a span of, I should say, 10 minutes. Just within a matter of 10 minutes, I think price traded literally from 17,460 to 17,450. I think this is where shorts got trapped. We saw a rally again. We saw a throwback, and again you can see on the same support band, prices are taking support and they are bouncing off constantly. Now, if you see the same thing in the hourly time frame chart, it is pretty clearly visible that these were the two highs over here. All right, these were the two highs, and the current trend is still up. If you if you have a look in the hourly time frame charts also, you will see multiple lower highs in the RSI and multiple higher highs in price. So we still have a negative divergence in the hourly time frame chart, but I think the bigger time frame, which is the daily time frame, is ruling right now. And you can also see that the overall market is pretty stretched. You can clearly see that the RSI has been above 70 since many days. I think since 28th July, RSI has been above 70. So this is a clear sign that even in the medium term, Nifty futures is pretty much overstretched. It certainly needs to consolidate. It certainly needs to maybe even correct couple of 100 points. But, market has its own mind and we cannot control market. So basically what I feel is what has happened yesterday is one thing which we need to understand, that the negative divergence has been negated. And in extreme short term, we can see a price taking support from its two previous highs in the hourly chart, and the price is trying to go higher. So if this rally continues, what are the levels which could be tested on the upside? I believe the levels which could be tested on the upside are somewhere over here, which is around 17,000, possibly 750. If this rally continues there, I think there is a space of almost 180 to 200 points. We can see this particular rally could happen. And even in the weekly time frame chart, if you see properly, there was a gap over here, which I did mention in the weekly sectoral analysis, this gap has been filled. All right. This gap has been pretty much filled. So once I think the gap has been filled, we do not have much of resistance left before this 200 points rally. So let's see what happens. But this seems to be the probable target as of now. And if you check the Bank Nifty chart is slightly more stronger, I believe, even though we do have a you can say a lower high in RSI and higher high in price. Why I'm saying that the Bank Nifty chart is slightly stronger than Nifty futures, the reason for that is this particular trend line breakout which has occurred in the Bank Nifty future. If you check in the Nifty futures, we are still under this resistance from where we have been seeing continuous selling pressure in last almost 8 to 10 months. But Bank Nifty has already given this breakout. So I believe overall state of trend of Bank Nifty is pretty strong. And in the hourly time frame chart, there is no negative divergence. There was till this point, no doubt about that. But when this particular rally did happen from 37,758 to possibly today's high, when this rally happened, the extreme short-term momentum was so strong that this high was broken. So this is a sign that Bank Nifty futures could continue rallying higher, and especially the private banks are helping too much to this particular Bank Nifty sector. And you can see already the private banks are pretty much overstretched. You can see RSI is almost at 77. This is the previous high in private banking pack. This is the resistance over here, Fibonacci. So in case if price hits the resistance in private banks, what could be the next sector which could help Bank Nifty go higher? I believe that could be PSU banks. But before rallying higher, it will need some sort of consolidation, a proper consolidation. And after that, if the rally continues, I think it could be meaningful because PSU banks certainly do have some space left on the upside. Apart from PSU banks, one more thing which I would like to share with you is IT index. IT index has rallied pretty nicely, especially the Infosys stock. You can see that it has bounced back from this important support in the daily chart. And what I can see is that this particular Fibonacci extension is very, very important. And this particular pullback is the largest pullback. This is what I have shared today on Twitter also. There are 3 pullbacks which have happened in last few months. This is the first pullback. This is the second one. And this is the third pullback. So this current third pullback is pretty much the largest. And in extreme short term, yes, it is slightly overbought, not that much, but a little bit of consolidation is possible. Maybe a small retracement could also be probable. Overall trend stays up, but in Infosys and in this particular IT pack, there could be some short-term consolidation possible. And I also believe that this particular rally has occurred on low volatility, which is a very good sign. So now we'll have to wait and watch how markets pan out ahead. Overall trend stays up, but try to find sectors, trying to find stocks where you get good risk reward, because we are already inching very much near to important resistance in Nifty futures. Because once we test this 17,750, my friends, will be pretty much closer to this trend line resistance also, maybe 70, 80 points higher. So just be careful of that. If you are trying to initiate trades in sectors and stocks which are extremely overstretched, and even Nifty futures being overstretched and near resistance, I don't think that could be a good scenario. All right. So trade wisely, pick your trades very, very thoroughly. Do the thorough study, only then pick your trades. Stay safe. Thank you.